We have a very interesting guest for you today. If I am not wrong, it is his first business channel appearance, somebody who tracks the startup ecosystem with equal ease as he tracks the listed companies. We've got Rajeev Mantri joining in from Kolkata from Navam Capital. Rajeev, good afternoon. Thank you so much for joining us on the show today. So Rajeev, first of all, let's start by getting your thoughts on the investing environment we are in right now, valuations versus the macro headwinds the market overall are facing right now. What are your indicators? What are you reading around it?
So clearly in the short run, there has been some uncertainty created by the geopolitical developments. So high oil prices obviously always kind of hurt India. So I think that is the key thing to watch in the short run as far as Indian markets go. And frankly, no one would really know for sure, of course, how this will evolve. But I think that should be watched closely in terms of the disruptive effect it can have.
Rajeev, what's your portfolio composition looking like right now? Both if you take into account the listed and the unlisted part piece. How have you formed your portfolio?
So the way we've been going about it is, I've for some time been very bullish on metals, and that has worked well for us in terms of the last year or so. So stocks like Tata Steel and some other metals companies, because obviously there's been this deleveraging cycle that went on there, and steel prices also moved up sharply last year, continue to hold. And once this war also started, those metal prices have also gone up. So, and I continue to think that there is good value to be had there. And besides steel, there are the new age tech companies. So most of them we had stayed away from when the IPOs happened last year. But I'm finding now that they are approaching a certain valuation level where entry points are getting quite attractive.
Let's break it down. You expect the Tata Steel and the variety to do well even from here on, because they seem to be gotten into a bit of a hurdle around the 1350 mark. But profitability outlook is as good as it has ever been actually. So do you expect that hump to be taken out and much higher targets even in the share price as profitability continues improving? Because one sense is that even 22-23 profitability outlook is kind of baked in as far as Tata Steel goes.
No, so generally for, I think, steel companies, if the prices do hold, and because of the deleveraging that has gone on in the industry, I think many of these players will continue to sort of do very well. And there's also been consolidation, of course. I think the steel industry in India, which was much more fragmented after the round of IBC and other kinds of resolutions that happened. So the industry is more concentrated now. And with the large capex that the government is putting out in infrastructure this year, even the so-called capex Mahotsav, which is likely to go on in corporate India. So I think steel demand should hold over the next 3 to 5 quarters. And I continue to be optimistic about where these companies will go in terms of earnings.
Okay, Rajeev, let's shift focus and talk about the Nykaa, Paytm, Policy Bazaar, Zomato universe, even car trade for that matter. Many of them have fallen about a third, half, or even two-thirds in some cases. Which of these actually you find attractive at current valuations and the business models which they are running?
So I've said this earlier as well, that in my view, and everyone should do their own research and homework, of course. But my personal view is that Nykaa remains the best of the lot. It remains the best pick of the new age companies. What I like most about that company is the stable shareholding and the kind of proven sort of operating model they have. They have successfully, very profitably been able to grow. And Nykaa is one of the few companies which has actually delivered venture scale returns. So when I say venture scale returns, I mean that early stage investors have made like 50 to 100 times the capital, and sometimes even more than that. I don't think any of Nykaa's investors are at this point underwater, which is not the case with most of the other new age tech companies, and I think their business has a lot of headroom for growth. So and this is the best positioned company in that space. So I like Nykaa a lot actually.
Since you have an eye on consumer tech, Rajiv, what did you make of Mr. Pota's exit from Jubilant Food? Because in his tenure, I mean, the company did take a lot of big strides towards transforming its business model to a food tech company. From 400 odd rupees a share when he had joined, the stock went up several times. And of course, there were other reasons as well why the stock may have come down from 4,000 plus levels to 2,500 now. But today the street is punishing the stock. Do you think this is an overreaction because the stuff which is already done or processes which is made may not get reversed at the company, what the street may be penciling in right now? And plus, there's no dearth of high quality leadership talent in the country. Somebody would come and take in. What street so worried about here?
No, so I haven't followed this particular company very closely, but that food tech and kind of restaurant industry in particular, somewhere they have taken a hit also because of all the issues around contact intensive industries and so on through the pandemic. But about this particular company, I will say, I mean, it had gotten somewhere, the valuations had gotten maybe too frothy, and some kind of a pullback was probably imminent. And we have seen this across counter after counter, right? So now whether or not they do well post the leadership change, of course, remains to be seen. But as far as this category is concerned, there is obviously long ways to go here too. If you believe that India will continue to grow as an economy, if you believe discretionary incomes will continue to increase, this remains a pretty good sort of bet on that. But of course, subject to valuations.
Okay, fair point. Rajiv, from the unlisted side of the business of your book, how are you? What are your kind of companies you have, or what are the plays and themes you are betting on in the startup universe?
So on the private side, I continue to be sort of very optimistic about what's nowadays being called deep technology in India. So this is where kind of technical oriented companies and more sort of, let's say, science driven innovations are coming to the fore now, as opposed to what has earlier been called kind of an Indian Uber or an Indian Amazon, or basically an Indian version of a business model that worked outside India, and a kind of emulation of that model adapted to the Indian context and so on. But I'm finding nowadays that more and more entrepreneurs are being more ambitious. A lot of investors are also open-minded now about putting capital behind what was perceived to be riskier. So technical centric companies which are, let's say, trying to commercialize a particular invention or some new kind of technology, whether it's in automotive, whether it's in pharmaceuticals, whether it's in advanced kind of artificial intelligence and software like that. So there is an appetite now which I'm finding that people do have, and that's a great sign for the entrepreneurial ecosystem in the country.
Rajiv, you also track domestic politics also very closely because the market was under the shadow of global macro headwinds. Perhaps the reaction was short-lived, but purely from a policy continuity standpoint, the way BJP has won the state elections, and the main one, UP election, was also by a wider margin than what the street perhaps was penciling in. Any thoughts on that? It will have an impact on the momentum in 24. Do you think so?
No, most definitely. I think this is a great outcome for continuity and political stability, and frankly, for any kind of business and economic sort of progress. I think that is probably the number one kind of parameter, because we've had a government now for the last 7-8 years which has implemented a number of structural reforms, and the result in this assembly election, which a lot of people were saying is the semi-final for the leading up to the final in 2024. So the resounding victory for the BJP is an affirmation of those reforms and those policies, which I think are very pro-growth policies. So it is certainly a great sort of result from a perspective of business and economy in particular. And yes, for 2024, it does set up the BJP and Prime Minister Modi for taking guard again for that election on a very strong wicket.
Rajeev, but because we are talking market discussion and market lingo, let me ask a question from you. Do you think 24 election is on market's horizon at all right now? And if not, because it's a little far off, or I would say that is it pricing it in yet? Do you see a case between now and 24 as it starts factoring in BJP's momentum, a rally to take place, a pre-main election rally? Is there can we conceive that?
No, I think certainly 2024 still weighs off from the perspective of equity markets. What I think is topical right now is all the action that's going on in Europe and the effect it has on energy prices and other kinds of commodity imports that India needs. But from the perspective of whether that potential momentum is baked into the expectations, for sure, I think at this point, most people expect that, right? That the BJP will come back. So it's actually a surprise on the other end of the spectrum, like something opposite of that happening, that will move markets. So I don't think momentum for the BJP or continued success for the BJP, I mean, that is almost presumed at this point. So it will take something to sort of upset that for markets to react, I feel, on that front.
Before I let you go, one quick last word on market and valuations. Which to your mind is the most attractive on risk-reward basis? Large cap, mid cap or small cap, or any particular theme which you are researching right now to add in your portfolio if this corrective phase lasts longer?
No, so I think there are several good small and mid cap IT companies which I think have gotten to very attractive levels because I think even though there is a lot of chatter on this, I think the whole digitalization and software wave that we are seeing is only just getting going, and I think people do underestimate how far it has to go. So I think those areas, the small mid cap IT companies, there are going to be some giants created in that space, and I think there is a if you take a 10-15 year view, there is a Infosys out there somewhere, Infosys type company out there somewhere, which will do extremely well. And I think this is the time to try to find one of those.
All right, Rajeev, we'll let you go on that one. Thanks so much for joining us today and sharing your market perspective.